while. You'll always start off kind of from the dashboard. This is going to give you, different, indicators of where you can access information. Today, we're going to focus on charts, how to access charts, where they are, and then how to apply them to trading. But you can, for any questions you have, we're at support@IVolLive.com, whether it's charts or any other topic. On Tuesdays, we tend to dive in to a specific topic, and we use this as a tutorial. On Saturdays, we kind of go over a broad overview. But with charts, we need something to analyze. And so, when it comes to analyzing certain names, and what I do is I typically have a shorthand list of names I'm following and I'm interested in. I also come here, I skim through our latest news feed. I like to see if anything stands out as particularly interesting to me within the feed. And then also I come to our news and research. This is our editorial department putting out different ideas. You could see what they covered on Monday. The newsletter comes out every Monday is inflation data, earnings beats, and volatility dipping. So this is always very interesting. This is how I like to start my week. Kind of gives me a recap of the last week. And then it gives me interesting ideas, right? So, this week, in terms of earnings, we have PayPal, Disney, and Toyota. So these might be interesting to pull up some charts if I was just starting off my week. We also tend to cover the VIX, which is the market's fear gauge. This is a widely followed, kind of fear gauge indicator of the S&P 500. So what's great about IVolLive is you're able to pull up a fear gauge using charts on any instrument that we cover. But the mainstream media, they typically cover the VIX. And so, we like to cover that in our newsletters. You can see some interesting trends with the VIX, prices in blue. So price has been going down. Implied volatility turned lower as well. So the VIX has been kind of calm and complacent, despite, occasional flare-ups with the ongoing, banking crisis, regional banking crisis, I should say. And then we talk about different ideas on how to play it. So all this information is great, but the whole point with IVolLive is how do you take all this information, how do you take all this data and turn it into actionable trades? So to do that, we need to be able to drill down on specific instruments. There's two main ways to access charts within IVolLive. There is on the instrument level here within this IVolLive tab. And then there's the specific charts here. Also, they have their own unique tab. So I'm going to demonstrate both of those for you guys today. For the VIX, since we were just talking about the VIX, let me go ahead and pull up this tab. And this is the tab I tend to have up kind of permanently in my on my IVolLive. It's a European style option, which is very interesting because that means you can't exercise the VIX options down here. You can't exercise them early. You can only exercise them at expiration. So I like to have this pulled up. I'm always looking for, kind of pricing that gets out of whack where the puts or the calls are much different. So you could see here, just as an interesting side note, the expiration for May 17th, the same strike, the VIX at 18, which is pretty much at the money. The calls are much more expensive than the puts, which means, the market's anticipating some kind of spike in the VIX, and a spike in the VIX typically corresponds with a pullback in the market. So this is one of the reasons why I always have a VIX tab pulled up. It gives you really, really cool information at a glance. But the also super unique thing I wanted to point out from this tab is on the left, you'll always have the fundamental data. And so in a different webinar, we'll kind of dedicate that to fundamentals. But for now, let's stick to the charts. And so to expand this view, you click on those four diagonal arrows. And what you have available in this chart view, in all of our chart views, you can go down to 1 day, or you can go as high as 5 years. But what's great about this particular view is 3 key things I want to point out. And then I'll show a fourth kind of as a bonus. But basically, if you look at our legend, what we have here is in blue. So in blue is the price. So this is the VIX's, price level. In orange, we have historical volatility. And then in green, we have implied volatility. So you could see, on this huge spike here in price, there was a corresponding spike in implied vol and historical vol for the VIX, which makes sense. As the VIX spiked up towards, here's price on the left, 64. You can see at its current price, 1698. It's very cheap, it's on the cheaper side historically speaking. But again, this is giving you 5 years worth of data on any instrument that we cover, so long as it's been publicly traded for 5 years. And so, again, this is a treasure trove of data. Then you can also go to 1 year, you can go to 6 months, 3 months, 1 month, 24-hour, and 1 day. But what's really cool about this too is from a timing standpoint, I like to use implied volatility to help me time my trade. So for an example, what I'll do with this view is I'll eliminate historical volatility. I'll eliminate, so now it's down to price in blue and implied volatility in green. But what's great about this view is you can isolate solely implied volatility, which is amazing. Like, I don't know anywhere else where you can do that. And then what you could do is you can put indicators on top of that. So for an example, when I'm looking at the VIX, I could add the Bollinger Bands. Again, this is all alphabetized. So you can either type in what it is you're looking for, or you can scroll to it in alphabetical order. And, here, what I'm looking at from a timing standpoint is I'm always looking for extremes in the implied volatility of the VIX. And so, because that typically tells me where the VIX is going to go next. So when I see a spike above the upper Bollinger Band on the VIX, and I see a spike above its upper RSI, reading of 70, like, it's only a matter of time before the VIX implied vol, retraces, which typically corresponds to the VIX retracing itself. So I use this as a timing tool, and what I'm looking for is extremes. So, what's interesting now, you can see here was another extreme, which was March 13th. So, this told me it was only a matter of time before the VIX retraced a bit, i.e. the VIX price retraced a bit. And that now, as we look at present day, we're kind of in the middle, so this is a uncertain signal. It's not clear to me whether we're going to break higher or lower, but sometimes knowing when not to trade is just as important as knowing when to trade. So we're not really at an extreme here, but from this charting view, these are the different things you can do. Those are my favorite things to look at. You can kind of scan out, high 10,000 foot above sea level view with the 5 years. You could come in very granular at 1 day. You could come in, 1 year is my favorite view for the VIX. But again, it just depends. If you're a short-term, mid-term, intermediate term, or long-term trader, you'll find the view that works best for you. Here's the 3-month view. And then from here, again, this is where you're able to overlay these different technical indicators. You could take a picture from this charting view, which I think is really good. And you can add that to your trading journal, which I do all the time. You can also save this as a chart layout. So that way, like, if you like this for the VIX, you can also have other names you're looking at. For an example, I was looking at, First Republic, prior to them going down. I was looking at Coca-Cola. I was looking at Coinbase, Pacific West Bancorp. So again, you're able to, if we just pull that back up, you're able to save that and then load that as another view. You can see I've done that. So you can, the way the question came in, how do you save a chart layout? This is the view you would save a custom chart layout on. So, if we just came back and we added those two, just for anybody that just hopped on the webinar here, here's the two indicators that we had. We also eliminated price, and we eliminated historical volatility. So that's how easy it is to do all of that. And then we can also draw, so for an example, if I want to point out to myself that this is middle of the road here, I can go ahead and draw that little symbol. If I want to look at my support resistance level on the implied volatility for the VIX, I can draw those lines here. So for an example, this is a level I'm looking at to see if it pierces, if it comes back and it breaks through this level, if it breaks higher. And then we can also come down and we could do support, kind of over here. And then there's all kinds of things you can do depending on if you like to draw. I'm not the best artist, but you can play with, the style. You could play with the width. We can make this dotted to show the difference between support and resistance. You could play with, you know, do you want to show that it's going to the right or to the left? So all kinds of cool things that you can do in this view. And this is the charting view where you add technical indicators and you add different drawings to the charts. On these charting tabs, which we'll show in a moment, those are great because they have, you know, preset metrics that you can use. But you can't necessarily draw on those or add the technical indicators. And then if I liked what I did here, I could say, you know, save, and this could be, you know, May 9th, technicals and support resistance. And I could hit save, and then from there, what will happen is anytime I want to apply that to another view, I can do so. I can also work from multiple tabs. So for right now, I have IVolLive just pulled up in one tab in my browser. But if I wanted to leave this as is, I could also, you know, come over here, come up with a new browser. And then again, I'd have my IVolLive chart set, you know, for further analysis. And then I could start analyzing, you know, Coca-Cola, for an example. So there is that question also came up. Can you work from multiple tabs? Yes. You know, so now I have two tabs on my browser, and then you can see I have, you know, the same tabs within my IVolLive session. So those don't go away. No matter how many of these tabs you're on in your browser, these same tabs that you have within your IVolLive will stay. It's just this charting view will stay rather than me clicking away. So other cool things that we were looking at in this charting view was Pacific West. You know, so this has been very interesting because I felt like it shows, this charting view really shows the relationship between price and volatility very well, in my opinion. So I went to 3 months because that's about the time frame that this banking crisis has occurred. You could see PacWest was at like $28 a share and has just cratered down to about $6 today. And as the price has cratered, volatility has spiked. So this is very interesting. And then, you know, again, you could apply different technical indicators to this. You could draw on this however you see fit. But I felt like this demonstrated that really, really well. So this is one area to access and analyze charts. I guess the key takeaway here would be I love using this view to isolate implied volatility and then apply technical indicators to that. I don't know anywhere else where you can isolate implied volatility. So for example, even on PacWest, you know, here on this 3-month chart, we can isolate PacWest implied volatility here, you know, and you can see these huge spikes. And then we could add our technical indicators on top. And you could see, you know, wow, PacWest really just shot higher over its upper Bollinger Band. So it made sense that it's now coming back within those bands. You know, I'd say the wild card here, though, is you don't know any given Monday if one of these things will be taken over by the feds. So, you know, buyer beware trading these regional banks that are under pressure. But still, there's some really, really cool things you could do, you know, using the charts on that. So key takeaways would be technical indicators, and also the ability to draw and mark up from this view. But what I really like the other view for on charts is, so if you come up with these charting tab, and if for whatever reason these tabs just disappeared, you accidentally hit X, do not fret. What you are able to do, here's some presets I had going on, but what you're able to do if you ever accidentally X out of your stock monitor tab, futures monitors tab, or charts tab, which does happen, and this is another question that came in ahead of the webinar, the way you pull those back up is you just click this little plus, and then you go to whatever it is that you want to view. So here's some presets as well that you can pull up, you know, different indexes, you know, the VIX you saw, which is probably my favorite, you know, the largest stock in the market, which is Apple. So these are different presets you could pull up under your tabs here. So for an example, if I needed charts, I could hit charts. And then if I needed a specific stock, like JPM, for an example, I could pull up JP Morgan, and that's how you would pull up a specific stock. But, you know, here's the charting tab. So you can see our default, I literally just pulled this tab up. So the default here is XPX. So don't let that confuse you when this comes up. It's not like this defaults to maybe the last tab we were looking at, but you are able to now decide what it is that you want to look at. So if we want to look at PACW, for an example, we could either leave the S&P here, and then we could add a spot price chart, or we could X out of the SPY. So now we no longer have the S&P 500. And we could add Pacific Bank. So we were looking at the 3-month and add chart. So here we go. This is another view of the spot price. You'll notice we're not able to, what we can do here is we don't draw and we don't add technical indicators, but what we can do is we can compare other names from this charting view, which I love doing. Per industry. So for an example, here I might say, okay, well, Pacific, is going down. What are some of the other banks doing? So on the other end of the spectrum, we have JP Morgan, which is doing great. It's too big to fail. It's gobbling up these regionals like Pac-Man. We have Wells Fargo. You could do Bank of America. And then another interesting one has been PNC. That's been on my radar. So again, depending on what industry you're looking at, you're able to just add in these different names, and you could see, hey, out of these PNC and JPM, these are names that are actively making bids on some of these regional banks. TD Bank as well. I was just reading earlier. So these are these banks that are actively making bids to buy up the regional banks. So you could see, are they trading in sync? Is one stronger than the other? JP Morgan seems to be the strongest bank, of them all at the current moment. And then, you have the regionals down here who are suffering. Another one is Regions Financial. And then we had Horizons, which just got rejected actually by TD Bank. And so you could see we could do up to 8 names here and compare them with the spot price tab. So for any of these charts, you're able to compare you're able to have up to 8 fields on the chart itself. So again, that's much different than what we were looking at, over here on the VIX, where we're focusing on analyzing one instrument with this charting view, right? On this other charting view, we can do a lot more per chart, like a lot more comparisons. So that's another key takeaway I wanted to just, hammer home. But, again, here, our legend tells us what we're looking at. So Pacific West is in red, JPM, kind of this purplish blue, Wells Fargo, Bank of America, PNC, TD, and Regions Financial. So 1, 2, 3, 4, 5, 6, 7. So there we go. So again, these are different ways to compare spot price in an industry. I like to keep this kind of as its own tab because, otherwise it can get a little bit crowded. The way you would get rid of a name is you would hit the trash can. So you can see we just got rid of Bank of America. And now we're down to these 7 or so. And again, I like to keep this as a separate tab. And since you can have as many tabs as you want up here, why not? So I could add another charting tab. Let's do that. Let's bring it over here. Again, the default is going to be SPY. Let's say I brought back Pacific West. This is another cool feature that I like to do. And we go to our frequency we've been looking at. So let's say probably our most popular tool for this, for a trader's perspective too, from this tab is, all right, I have my spot price. How can I compare this? How do I create a custom fear gauge, right? And so to create a custom fear gauge, so it's almost like creating your own VIX, but creating it per instrument. So what you would do is you go to this IVX chart, you would type in your same symbol, you would go to the same time range, so that way it's apples to apples. And this is where it depends on, if you're a short-term, intermediate term, or a long-term trader. Kind of the most popular tends to be IVX 30. This is looking at, implied volatility for the next 30 days. But you can see, if you're a long-term trader, if you want to look at leaps, we go as far as 10,080 days out. We also go as low as 7 days out. So it kind of depends. IVX 30 is a great middle of the road measure. And so if we add that, we can see this beautiful relationship where, to start the year, January, February, Pac West was doing great. And so its implied volatility was very low, But then as it fell off this cliff, this guillotine here, implied volatility spiked. And then we had a bit of a respite. And then now, there was that fall off last week after earnings, which coincided with a huge spike in its IVX. Look at that, 459.18 on the IVX term. So what's great about this is on our horizontal axis, this is telling us the day. And then on our y-axis over here, this is telling us the IVX level. And you could see that, again, we could go 3 months has been really interesting, I think, for PacWest in particular, because that's when it went from this boring regional bank to this, very active name. But, again, you could change this range to anything. I want to just stick with 3 months just for now for this example, because I want to add another chart. I want to show kind of our most popular ones. Historical volatility, everybody's pretty much familiar with, I would think. Here again, if you were doing apples to apples, you would add the 3 months. HV20 is equivalent to IVX 30. That was another question that came in. So HV20 measures 20 trading days. IVX 30 measures 30 calendar days. In those 30 calendar days, there's 20 trading days minus holidays. So HV20 and IVX 30 are congruent. And so here is the historical volatility for PacWest. You can see it's kind of mirrored implied vol to an extent. And then another one that we liked, that's probably the most popular, is this total open interest in volume. So total open interest in volume is going to show you how many puts are being traded, how many calls are being traded. So if we stick with, you can do call and put. I like to differentiate the two. You could do open interest or volume. I like to do volume. And then here you could see our view automatically changed. So this is another good point within charts. This is how you change your view. So if you like this, kind of 4-square view, I like to have everything stacked. Or if you'd like to have one be more prominent than the other, you could choose kind of these different designs. But for me, let's stick with the stack here because it shows me what I want to see very clearly. You could see on my total open interest in volume, this is call volume. And then all we have to do if we want to see put volume is we can add Pacific West and we can do put and we can hit apply. And now, those lines get a little small. So this is a good teachable moment. If you want to ever expand the view on a specific chart, you just hit this square and this will pop up. So here's what this data is telling us. In early February, again, there wasn't much going on. Our legend, just real quick, calls are in black, puts are in red. You can see there really wasn't much going on. But then when we came into April, things really started heating up. And then May, PacWest kind of showed up on traders' radar as this potentially troubled bank. And you could see now we've had a huge surge in put volumes. So this is people either buying protective insurance by buying puts, or this is them betting on the downside of PacWest. But since it's IVX, as we saw on our other chart, since its IVX is so high, making those speculations have become very expensive because its implied volatility, is so high. But these are the different ways, you expand, you contract. You could also, compare here, let's go PCW. You could compare it, maybe it's IVX 7 here. So here you're comparing for PacWest, but what you're looking at is the difference between the price, the levels here on the 7, IVX 7, which is a shorter term, more sensitive, versus the IVX 30. So you can see there's a big spike here recently because following that earnings announcement, it was unclear, was PacWest going to go under, was it not? So the shorter term options had higher volatility. So these are also really cool, interesting nuggets you can use. On the flip side, you could compare that to the ACW, and we could go further out. So we could say, what about, 180 days, for an example. You can see that's more flat, because there's less risk as you look 180 days out versus kind of these shorter terms. For this particular name, that could vary per name, but in general, that's what we're looking at here with PacWest. So that's a cool example of how, if you're kind of versatile with your timing. Like for me, again, I'll do short term, intermediate, or long. You could kind of compare those things on one chart and see what makes the most sense, to strike. So these are, and I like to have 4 is kind of my max I like on any one view. You could keep going and you could add as many as you want of these different charts. So you could have implied volatility, single contract analyzer, IV index, open interest and volume, historical vol, term structure, skew, IV premium, and IV difference. You could have all of those here, or you could have multiple tabs. So I want to continue kind of showing how to do the multiple tabs. Again, this was comparing all the different banks. I had some of these preset to show you guys. Here, was another one that I was playing with, which was the regional banks. Here is that same tab. Here was just a very easy custom fear gauge. So on the webinar on Saturday, I was looking at Coinbase, and we were kind of analyzing potential trades on Coinbase. So you can see here, a couple clicks, I just set up a custom fear gauge, on Coinbase, where you can see when price goes higher, IVX goes lower, et cetera, et cetera. We could add to this. We could add the implied volatility. So this is another good example. Time range 3 months, period 30, and then we could do, depending on the type of trader you are, when you're looking at the implied volatility, like if you like to trade out of the money options, you could select, this is where you could pull that up on the implied vol chart for the underlying. So I tend to trade more at the money options, but depending on your taste, you could do, any of those selections. What you could also do is from within this chart, so you could see here's our implied volatility, check my time frames, they're all 3 months, so it's all apples to apples, and this is at the money. But again, depending on if you wanted to compare, contrast, what at the money looks like versus let's see, versus going, let's say 40% out of the money on the puts for Coinbase. You can certainly do that. And here we go. And this will show you what this will do is virtual strike. This gives you the virtual strike based on that criteria, 40% out of the money at Coinbase's price at February 17th, for an example, and this is the current, on May 8th, the virtual strike would be 23.24 for 40% out of the money put. And this is what the IV levels look like. If you could see, are higher than the at the money. So you could compare, contrast, like maybe you're not sold on whether you want to go out of the money or whether you want to go at the money, and you want to compare what different pricing looks like. So I don't want to get lost in the weeds there. If this is something you like to use, this is how you would do that. And then again, you could compare up to 8 different fields here. So I could keep going and do not only puts, but I could do calls, as well, which is a really, really, really cool tool. So depending on how advanced you'd like to get with that, those are different things you could do with implied volatility. And I just want to keep going because I had some presets here. Here's another different grid view. This is just SPY. So again, if you're looking at, the market in general, this is a really, really cool place to look at just general market trends. And then the other thing you could do is you could compare, contrast that to this view here. Let's see, SPY, and then we could have our charting view here. We could bring this over. We could come out to 3 months. We could then go down to only the S&P's 500's implied vol. And then what we could be looking for is we could also be using this as a timing indicator. So in the same way we were using the VIX as a timing indicator, I like to use the S&P 500 because it's just such a widely followed range. And you could see here, this is very interesting because the S&P is kind of in the middle. Its implied vol is in the middle of its Bollinger Bands and its RSI. And if you remember, the VIX was as well. So if we go here and we add our bands, and then we add our relative strength index, here we go. So you can see we're almost identical on the RSI and on the Bollinger Bands. within the S&P and within the VIX. So this means, the market doesn't really, it's marking time. It's deciding it's building up momentum for its next move, which again is very powerful information to have. Again, you don't have to trade. Sometimes knowing when not to trade is more effective than just trading and blowing your ammo. So, here again, this is what your default settings will be when you just join us. But from here, you could tweak this. You could tweak the view, like we did earlier. You can also add, different charts. So I just want to, kind of briefly touch on some of these. The question came up, can I access some of these charts within the options chain? And you can. So for an example, I'll show you which ones those are just real quick while we're talking about it. For the VIX, let's just go to the VIX. We're here on the options chain. Here's the calculators, which we won't really go into. We'll do that on a different webinar. But here's price and implied volatility history charts. And what's great about this is you could choose between bid, ask, last. So here's our last price. You could see, an at the money VIX option here with this $18 strike. The price has been going down all day, as volatility is kind of just withered away. You could see what's happened with the implied volatility on this specific strike price. So this is fantastic because this is using, up-to-date real-time information. And then here's probably one of my favorite things. This is the table view. So, it's like these pricing charts on steroids because it's showing you the bid, the ask, and the last price, and at what implied volatility level actual trades took place. So this is where actual money is trading hands, which is great because, when the traders put their money on the line, that's the judge, jury, and executioner. You can see there's, been a pretty wide spread, which tells me even more so that the market's trying to decide which direction it's going to go. And then you can see as the day wore on, we had a lot more volume. So really interesting things you could find here. That's a shortcut for price in IV history charts. And I actually, prefer this view, to be honest, because it shows you everything in real time, and it shows you where actual money is being traded. And then here's our time skew. So if we were here, if you think about it, looking at these chart sites, you have implied vol in price, and then here's our skew. So time skew chart, here's what I like to do as well. I like to find a specific name I'm interested in, and then a specific option. So the VIX, and then I'm interested in this, $18 strike, which you can see here. And this will give me the time skew. And what's great about this is I love this view because it makes it very simple. On the x-axis, here's our maturity. So this is saying, all right, here's options that expire in 1 day, and 15 days, and 29 days, and 71, 134, 190, and 253 days. And then here's our implied volatility level. And so what you could see is, look at that. The implied volatility on puts is so much higher than the implied volatility on calls at this point. So, that tells us there's this major discrepancy, especially here. But look, this is only in the short term. Over the intermediate term, it kind of levels out. And then over the long term, it kind of levels out too. You can see we're not too drastically apart. But this is showing us this huge amount of short-term uncertainty, which could be very, very useful. I like to look at puts versus calls when I'm looking at time skews. But you could isolate to only look at, put, or only look at the call. Just depends on your preferred view. But these are my favorite ways to access the pricing and implied volatility history charts, as well as the time skew. If you would prefer, you're also able to do so here, where you could pull up SPY, at VIX. You would just choose your time period, real time on. I'm using a real time account. And here we go. This is showing us, similar data to what we were just looking at within options chain. So there we go. And then finally, if we come to, I want to come here and I want to get rid of that. And then I'll show another one of my favorite. IV premium and IV difference are almost the same. So for an example, we could do JP Morgan, and we could say over the last 3 months, because this has been again, kind of the Pac-Man gobbling everything up. So, we have our IV premium chart here on JP Morgan. What's really cool about this is 0 is our dividing line. here. So anything over 0 is when we have a higher implied volatility. And then anything below 0 is when we have a higher historical volatility. So you could see, you know, implied volatility for JP Morgan has been going down. Currently, it's negative 9.19, which means, you know, the market's pretty complacent on JP Morgan. I think the feeling is it's too big to fail. It's buying up. The Fed's turning to them to bail out all these smaller banks. So what this means is with implied volatility going lower, you know, pricing on JP Morgan options is going lower as well. Now, what we could do is we could compare that, you know, to maybe let's see, IV Premium, and then let's go. We've also been looking at Pac West for 3 months, and over the IVX30, historical volatility 20, add chart. And so, yeah, check this out. You know, here's this is now Pac West. 0 is our dividing line. You could see it had this massive spike where in early May, so a few days ago, where IVX was, you know, IVX minus HV. So future looking at versus past was 177, right? Meaning, you know, option prices were crazy expensive. And now they've since come down, excuse me, now they've since come down, you know, as the jitters have kind of receded a bit. But this is really cool too, because then you could compare, you know, this IV Premium on a massive bank like JP Morgan, you know, and what's going on with its IVX versus historical volatility versus something like Pac West. So IV Premium and IV Difference kind of show very similar things. And that covers the charts. But again, you could have as many of these tabs as you would like open and using them to compare and contrast. I tend to have 3 or 4. Some of them I'm using for timing. Some of them I'm just using to show me general market data. So for an example, you know, this is great because it's showing me what's going on with the S&P any given day. So I kind of keep this running in real time in the background. And then I'll come in and I'll create a custom fear gauge on something I'm very interested in, like Coinbase. And I'm looking for extremes, you know, where the IV index is either super low or super high. And then we have our individual names, you know, where we have, you know, the VIX, for an example, and we had the chart pulled up over here within the stock monitor view. So those are the 2 different ways of thinking about chart. Those are 2 different ways to access charts. Those are a few different ways to think about using charts within the trading. And then again, once I find interesting entry points or interesting discrepancies or extremes, like for example, with the VIX, my key takeaway, you know, today has been I'm really not doing much of anything because the VIX is kind of stuck in this middle of its range. So there's really nothing interesting going on. So is the S&P 500. So, you know, as boring as that might be, from a trader standpoint, my key takeaway sometimes is just, again, to do nothing until the trend becomes a bit more clear. So if I was a trend trader, I'd be waiting for an extreme, or a swing trader, I'd be waiting for an extreme, you know, so spike above or below here. And then I'm verifying all of this on my different charts where I can drill much deeper. So I think that's a good chart overview. We'll do another one of these too, where we take a few different names and just literally go through each chart type and show cool tools for that. From a high level, you know, using things like the VIX and SPY, those are some of the different ways to use charts as a timing tool and to also drill down deeper kind of within the options chain. So I want to pause now and see if there's any questions. Feel free to throw those into the chat for me, please. And we can go ahead and address those. We'll also send out a recording of this to everybody who registered for the webinar. So that way you can go back and access it at your leisure. And then to get access, if you're already an IVolLive user, excellent. If you're not an IVolLive user yet, the best way for us to get you all set up is to shoot us a note at support@IVolatility.com, and we'll get you all set up. So if you're not currently a user, write to us there, support@IVolatility, and we'll get you all squared away. All right, great. Well, I'm sure it is a busy Tuesday for everybody. Thank you for joining us for this 50 minutes or so as we talked about charts, how to access them, how to use them with IVolLive. We'll do another follow-on to this as well. This is typically a popular topic. So check your watch your inbox for the next note. And then I hope everybody joins us Saturday, where we'll do a general overview. Not only will we touch on charts, but we'll touch on all these different tools and how they are incorporated as part of this holistic approach to analyzing potential trades that you can make using IVolLive as your research engine. So thank you guys. This has been Jonathan with IVolLive. Hope to see you next time. Until then, happy trading. You're welcome. Thank you guys. Thanks for the kind words. Appreciate it.